What you really need to 10x your money is one powerful plan. And in this video, I'm going to show you why I'm not chasing individual stocks anymore. I'll walk you through the exact ones I have in my portfolio that have already 10x my money and is on its way to 10x again. All right, I'm going to say something that might surprise you, but trying to pick the next 10x company is one of the fastest ways to lose your shot at financial freedom. Everyone online is talking about the next Nvidia and Wall Street bets, but here's the truth. You don't need a miracle stock to build wealth. And let's face it, if they're already talking about the next miracle stock, it normally means you're already too late. Hi, I'm Emily, your big sister in finance and founder of Soro, where we make personal finance clear, relatable, and actually useful for us figuring out life and money together. If this is something you're into, then hit the like and subscribe button and keep watching. So you probably heard the saying, don't put all your eggs in one basket. That's diversification. And it's not about being average, it's about being smart. Because let's be real, even professional fund managers with billions of dollars and full-time research teams fail to beat the market most of the time. So instead of trying to outsmart the system, I'm choosing to own the system. And that's what an index fund does. It lets you own a tiny piece of the entire market. The best performing companies pull you up and the worst can't take you down. That's not mediocre. That's mathematically brilliant. So instead of chasing the next hot stock or trying to beat the market, here's exactly where my money is actually going. Okay, so number one, the S&P 500 index fund. This is the foundation. This is the financial home base. It gives me broad US exposure, steady growth, and the confidence that my investments are tied to the most resilient, innovative economy in the world. And when you own an S&P 500 fund, you're not just betting on one company, you're betting on the long-term success of American business. Whether it's tech, healthcare, finance, or energy, you're holding a tiny slice of every major industry. And that's why it's the backbone of my portfolio, and honestly, of most millionaires' portfolios too. Okay, so number two, the target date fund. So the autopilot option. If you want to set it and forget an investment, this is it. A target date fund automatically adjusts your mix of stocks and bonds as you get closer to retirement. So when you're young, it's going to be more aggressive, heavily invested in stocks to help your money grow. And as you get older, it's going to gradually shift towards the safer, more stable investments like bonds to protect what you've built. It's perfect if you don't want to constantly rebalance your portfolio or stress about the market timing. And it quietly evolves with you. Less stress, more peace of mind, and a clear path to long-term financial freedom. When choosing a target date index fund, you want to choose one that will align with your predicted date of retirement. So that means if you're 25 now and you'll be retiring around 2065, choose a target date 2065 index fund. Okay, number three is a total international ETF. This is going to be your global growth engine. The world just doesn't end at US borders. A total international ETF lets me invest in markets like Europe, Japan, and fast-growing regions like Southeast Asia and Latin America. It's easy to have a home bias, but some of the biggest opportunities over the next decade may come from emerging economies. Places with young populations, rising middle classes, and growing access to technology. And already, some of your favorite companies are not US based. Think Spotify, Samsung, Toyota, L'Oreal. How amazing to own a piece of their growth. And by owning an international ETF, I'm not just betting on one country, I'm spreading my growth across the world's future leaders. Okay, so number four, bond ETF, the stability anchor. Bonds don't get the same spotlight as stocks, and that's kind of the point. A bond ETF adds stability and predictability to your portfolio. When the stock market drops, bonds often hold steady or even rise. They're the cushion that keeps you calm when everything else feels chaotic. For me, bonds are about balance because real wealth isn't just about growth. It's about staying invested long enough to actually see that growth compound. Four core investments. Together, they make up a diversified, low-cost, automatic wealth-building machine. No day trading, no chasing hype, just slow, steady compounding that quietly changes your life. And I know what you're thinking. Just a few stocks? That sounds reckless. But remember, it's not just a few stocks, it's just a few funds. a handful of funds is actually the same thing as owning thousands of different stocks. This isn't some radical new idea. Some of the greatest investors in history built their fortunes exactly this way. Warren Buffett, one of the most successful investors of all time, has always praised the power of diversification for everyday investors. He's said that for most people, the best thing to do is consistently invest in a low-cost S&P 500 index fund. And that's coming from a man who built his fortune picking individual stocks. Buffett himself has said that he plans to leave 90% of his own family's money in an S&P 500 index fund after he's gone. That tells you everything you need to know. Diversification isn't a safety net. It is a proven wealth building strategy that works quietly, steadily, and consistently over time. So that's the first step, choosing which funds to buy. Those are the ones that I have in my portfolio and will continue to buy. But how does buying those 4 investments lead me to 10x my money? It's something called compound growth, and it's the quiet, consistent force behind almost every millionaire you'll ever meet. Here's how it works. When you invest, your money earns returns. Then those returns start earning their own returns. Over time, that growth builds on itself, like a snowball just rolling downhill, getting bigger and faster the longer it keeps going. At first, it doesn't look like much. Your account might creep up slowly, but give it enough time and consistent contributions, and the curve starts to shoot upwards. That's the moment when the compounding takes over and your money starts doing the heavy lifting for you. It's not about timing the market or finding the next hot stock. It's about time in the market, letting your money grow, reinvest, and repeat for years and years. And that's how investing in something as simple as an S&P 500 index fund or a diversified mix of ETFs can turn steady contributions into life-changing wealth. It's slow, it's steady, and it works every single time you stay consistent. So now you have your investments and you understand the power of compound interest. Now it's time for gasoline on the fire, contributing early, often, and consistently. This is the power of dollar cost averaging and will give you the biggest wins to get to that 10x goal. By contributing early, often, and consistently, you're buying more shares when prices are low and fewer when prices are high, smoothing out the bumps of market volatility. This strategy removes the pressure of trying to time the market perfectly, which is a nearly impossible task, and keeps your money working for you at all times. Over years and decades, these regular contributions combined with the compounding growth of your investments can turn a modest monthly deposit into life-changing generational wealth. Okay, so let's break this down using real numbers so you can copy my exact investment strategy that 10x my money, and it's on its way to 10xing again. So I personally started with $10,000. That was from part-time work, internships, birthday and graduation money, you know the deal. I opened a Roth IRA and put in the max, which at the time was $6,000. I put the remaining $4,000 into a taxable brokerage account. I split the $10,000 like this. I put $1,000 into bonds, $3,000 into the S&P 500, $3,000 into an international ETF, and $3,000 into a target date index fund for 2055. So that's 10% into bonds, 90% into stocks, ETFs, split evenly among the 3. And then when I started working and getting a proper income, I got my employer match, which was 5%. So that totaled $500 a month, and that was invested in my 401k. Unfortunately, with the 401k, I was more locked into the employer investment options, but I was still able to opt for low-cost index funds. I put in an additional $500 a month into my Roth IRA, where I contributed my 90-10 split between the stock ETFs and the bonds. By investing my money into these funds from my original $10,000 and what I was consistently adding to it with every paycheck, my money grew an average of 10% a year. And with compound interest on my side, my money 10x to $100,000 in just 5 short years. And I still stick with the same strategy today, increasing my investing rate as my income has grown. And now that original $10,000 is on track to 10x again, hitting $1 million before I hit 40. I should also add, my income has never really been that high. It's always been between $50,000 to $100,000 a year, which is good money for sure, but it's not like I'm making millions over here. It's a salary that's completely attainable for most people. And with the power of compound interest, if I didn't add in another penny, I would still hit $10 million by the time I retire at 65. But I'm not gonna do that. I'm gonna keep investing, so I'll probably end up at around 12 million or so. You see, once you get into those big numbers, the additional amount of money you invest has less of an impact, which is why those early years are so crucial for growth. And the best part, since a lot of that is gonna be in my Roth IRA, I'll actually get to use that money tax-free. 4 funds, a simple proven strategy that doesn't rely on finding the next hot stock or trying to beat the market. By investing consistently in low-cost ETFs, index funds, and target date funds, letting compounding work its magic, and sticking with a plan over the long term, you're giving yourself a real shot at 10xing your money and building life-changing wealth along the way. The key isn't luck, it's patience, consistency, and smart choices early on. So start with a small amount, keep contributing, and let time do the heavy lifting. That's how ordinary people turn a few $1,000s into a $1 million portfolio, and why the strategy has worked for countless millionaires, including some of the world's smartest investors like Warren Buffett. If this video gave you clarity or inspired you to take action, hit that like button, hit that subscribe. It really helps me create more content like this. Subscribe if you want to follow along as I continue to share my portfolio, strategies, and tips to grow wealth. And here's the question that I want to hear from you. Are you currently investing consistently, or are you still trying to time the market? Drop a comment below. Your story might inspire someone else to start their journey today. Remember, it's not about how much you start with. Keep investing like someone who's planning to stay rich, and the results will follow. I'll see you in the next one.